Welcome to the Health Tech Invest podcast powered by Nutera Ventures, your guide to healthcare investing. Join us as we explore interviews with pioneering entrepreneurs, investors, and innovative leaders, helping you spark innovation in the world of venture capital investing. Awesome. Brian, thank you so much for joining the Health Tech Invest podcast. It's great to have you on. Always a pleasure and a privilege to talk with you. Before we sort of get into some questions that I have for you, do you mind just giving a brief overview about your background and kind of where you're at today?
Sure. Thank you, Tom. I really appreciate the opportunity and look forward to our talk today. I have been in venture capital for about 20 years, and about half in financially oriented organizations and about half in more corporate strategic organizations. Prior to my venture career, I spent 7 years in the sort of aerospace and defense industry, directly with the government and also with a large government contractor, doing sort of RF systems engineering. So started out with a material science and engineering degree, and then moved into systems engineering, and then got the sort of venture bug and moved into venture.
Very interesting.
Yeah. And currently I'm with Global Brain. We're one of Japan's leading global venture capital firms, and I head the U.S. Region for them.
That's awesome. So that's a very diverse background, right? So sort of a bit on the engineering side, and then I know that you made a couple of moves on the corporate side. So you were a corporate VC back in the day. What's sort of I guess what's the difference between where you're at now, which is quasi corporate but also financially motivated, and then working on the corporate VC side? What sort of differences would you note there?
Sure, and the great question. So my sort of prime corporate experience was with Nike. I was there for 4 years, hired as part of kind of setting up a in-house corporate venture capital activity, originally focused on sustainability and sort of new business models. It was actually spearheaded by Hannah Jones, who was the head of the sustainable business sort of wing of Nike and sustainability, and she really kind of spearheaded us taking a look at our entire supply chain and really seeing where we could maybe substitute in other materials or help companies that were launching new materials, new compounds that were better for the environment, and sort of maybe help them along. And over time, it morphed into, ultimately, with the CFO change, our team got sort of absorbed, and we actually became the first official corporate development team of Nike, which you would have thought that they would have had one always, but they did not actually until, I believe, 2014 is when we were set up. So at Nike, we didn't really look at venture capital as a activity in and of itself to do. Our objective, our team's focus was really strategic partnerships for Nike, where venture capital was one of the tools. If we could accomplish what we needed through a commercial partnership, we would certainly pursue that. If an acquisition made sense, maybe in the case of an acqui-hire for like a non-core function, like for instance in software or anything not related to core Nike product, we would look at acqui-hires. So at Nike, it was a very highly strategic experience. Sometimes it could take 6 months or a year to have internal BU champions and really go through the ringer and ultimately pitch the C-suite on every single investment opportunity. So from a corporate venture standpoint, I think it was about as strategic as it gets, and also probably one of the most elaborate processes that I've experienced. Yeah. And financial return was really not what we were focused on. We were focused on strategic return, and we wouldn't evaluate investments necessarily with return multiples. We'd evaluate them with what is the kind of EPS impact to Nike if we can get this technology deployed in wherever it was going.
VPS? What is the VPS?
Sorry, EPS, earnings per
EPS.
share. So we had to actually articulate the the actual financial benefit of not just, hey, we'll make, a 3x or 5x or whatever return. It actually, what's the impact to Nike?
The core business. Yeah. Yeah.
Yeah, exactly. So venture was a tool that was used, but not more often than not, we could get what we needed through some sort of a commercial relationship or a JV. Fast forward to Global Brain, super different. Global Brain is a dedicated venture capital firm. We are the general partner in, I believe, 22 active, or at least 22 funds. I think 20 of them are active right now with about 2.3 billion AUM. We are a pure financial investor. We operate two types of funds. One is a multi-LP traditional venture return investment fund. We're investing at a fund 9. It's primarily a domestic Japan vehicle and focused on startups in that region. Internationally, we tend to focus more with our single LP funds where we're the general partner, and then there's one, in our case, Japanese corporate that is the limited partner. And some of those funds are more strategic than others. However, there has to be they all have the common theme of Global Brain as the only general partner needs to approve and believe that it's a financially sound investment and has the appropriate amount of risk. So in this construct, we're here to do venture capital and hopefully assist our corporate LPs in every way possible. So it's a very different, but that experience did really help me understand how corporates think and evaluate kind of venture capital and some of the challenges that are involved.
That's very cool. That's very cool. I'll get back to the venture capital as a service model because I think it's fascinating and I obviously have experience working with some of the other folks in the space. But tell me a little bit more about kind of what drew you to venture capital. So obviously, was it a push or a pull thing that got you into it? Did you sort of fall into it and then fell in love with it, or were you sort of intentionally looking for venture capital opportunities? What kind of drew you to the space?
Sure, great. Well, at the time, I was working at Science Applications International in kind of Southern California, doing systems, kind of corporate business development with government clients and just looking at new business opportunities. And I decided to do business school, so get an MBA at USC. Actually enrolled in the kind of PM program, but really took a full-time class load. And in part of that, I got to take a class or had some exposure to the Tech Coast Angels, which were a large angel syndicate, and was just fascinated. Frankly, hadn't really been aware of this at all. I came out of the government world and really almost couldn't read the Wall Street Journal and understand it. So I was super fascinated and became kind of a groupie, and I think I was their first intern. I just kind of showed up and said, hey, I'm working full-time, I'm going to school full-time, and can I be your free intern? And they said yes. And that got me in a situation where I got to observe their pitch meetings, and I was fascinated with the exposure to ideas and really kind of escaping the boredom, at least for me, of kind of thinking about one thing constantly or focusing on a narrow set of tasks, which wasn't as exciting to my mind. And so I just got hooked on the constant adrenaline rush of new exciting ideas and the possibility of what if. And so yeah, and then I guess I finally found a firm in San Diego, a small regional firm called Shepherd Ventures, about 80 million AUM, and took a pay cut and became kind of like a senior analyst for them, and then managed to stay in the industry since then.
Awesome.
For 20 years, yeah.
That's amazing. Yeah, I love the the pay cut move because you were thinking more long term, right? You really wanted to be in this game, and so you looked at the short term loss as just a kind of a blip in your journey. So that's awesome. How is your kind of investment philosophy changed over time? Like, I mean, I oftentimes try to reflect over my journey, and I've been doing venture for like 18 years, and I kind of reflect back on what did I think was really interesting to invest in 18 years ago versus what's interesting to invest in now. And it's crazy the difference that my career has taken me, right? So
Tell us a little bit about how your investment philosophy has changed.
Well, thanks. Great question. So I started out at a generalist fund. So we were looking at everything from specialty pharma to semiconductors and really worked on all of our deals.
That's a wide range.
Yeah, it really was. Well, what it did teach me is sort of a disciplined investment memo and due diligence process and valuation methodologies. And so it helped, that kind of helped normalize when we looked at these different businesses, how we could kind of compare them all to each other. So that was a good discipline, good practice. I think after evolving past that experience, I started to get more into thesis-based investing. The first kind of one was wireless-based healthcare, kind of in the
okay.
08.
In the early days.
In the early days, like what can we do with Bluetooth? What can we do with the different kind of RF technologies with sensors? It's kind of a little ahead of its time, but I've always been interested in sort of the crossover with med tech and sort of RF technology and even lasers and LEDs and
cool.
Therapies. Yeah. So now over time with the corporate investing, you're really going on a mandate. So you're more like doing sort of a tech hunt or a shiny object hunt to fill a sort of innovation gap. And then now we have, sort of a lot of our funds are interested in deep tech. So I'm trying to kind of be at the forefront of, almost like quantum AI robotics or like, sort of the really just trying to kind of see what is viable, what's not with some of this technology, but still having the thesis in the background of, hey, we think that humanoid robotics are going to do these type of tasks at some point in the future. So what does that industry look like? Or we think full autonomy is going to be in this space. What are the critical technological developments that need to enable that? So in my current investment sort of outlook or the way I think of things is I try to thematically invest around technologies that I think are going to be like come together and kind of have a future, because very dynamic world. There's a lot of innovation at the pace of AI evolving right now. It's really hard to project even a year from now in some areas. So I try to look for like how can we apply what we know now into things that we're already doing to become more of a pain. My first VC job, one of my mentors said, hey, you want to invest in things that are painkillers, not vitamins, sort of like
love it.
I have to have, not like a nice to have. So I try to think about that in the sense of, where's AI, for instance, AI, where does AI really disrupt business models in sort of helping people do things better and faster in like factory automation or healthcare, et cetera. So
I love that. A friend of mine from Qualcomm who's since left Qualcomm would always say that, right? Painkillers versus vitamins. And that kind of really that sits well with me. And I always think about that. But, I was having a conversation with another colleague a couple of weeks ago, and he was like kind of putting on his like crystal ball kind of analogy for venture capital. He was like, we got to predict the future and we need to get in front of like these trends before it's too late, because if it's too late, you're not going to make money. And like, what makes a good VC? I mean, is it really predicting the future? Is it just being smart about the trends and doing deals very disciplined manner and a thematic manner? What's the, again, not to take away your thematic approach analogy is maybe the response to that question, but what makes a really good venture capitalist?
That's also a really great question, because I think AI will help flush that out even more. Kind of what is really unique to people versus what can AI do maybe better. I think there's many people in our field that have very strong opinions about what makes a good VC. I mean, I think the sort of table stakes are you have to be able to pattern match. You have to be, meaning there's a key element in all business or anything really is the people. And so very quick read of the room. You often have limited engagement with people, very short amount of time to assess. So just quit kind of gut instinct assessment is I would lean towards is a very favorable trait. I think when you rely on the numbers too much or you just sort of crunch things, I think what you lose is the fact that the financial projections are likely very strat math oriented and not necessarily robust. So it's really hard to get too quantitative on looking at, especially stuff that's like Series A or earlier. So I think having the ability to visualize a founder's vision and then sort of reality test it in your head or sanity check it in your head, like, is this good? And then also you can either be sort of a generalist or specialize, and that those are both fine. They have different sort of value to different LPs, but you also have to know how to get to the expert, or know how to get to the person who knows enough to make, properly, to provide you with a proper informed opinion, because it's difficult. And one of the challenges, I think, is it's hard to, keep doing like semiconductor deals. If you were a semiconductors person 10 years ago and you've been a VC now for 10 years, you've been out of, I think if you've been out of industry for more than a year, you're starting to lose that fresh, view and sort of pipeline knowledge. So I think having a robust network of people you can rely on, and then again, pattern matching. And that's where AI comes in. I think AI can actually significantly enhance sourcing and sort of filtration of opportunities and sort of prioritizing what you need to look at. But ultimately, you need to go touch it, feel it, and sort of apply the gut instinct and sanity check, because there's a lot of things that can slip through and get pretty far. And then you're like, well, no, that's not, especially for corporate VC, where there has to be good chemistry as well, because there's probably a strategic interest or some sort of collaboration. And if the team isn't going to mix with the corporate team, then it's not going to be a successful partnership.
That's spot on. There's nothing that you said that I don't 100% agree with. So, and you are you were sort of describing yourself in many ways, right? Because you're a great investor, and you do have a rich network, and you've always got a good instinct for technology, in my experience, just kind of putting you on the spot here, but you've always kind of understood Natera, right? That was one thing that I commend you for, because, we had limited interaction about the core business, but you were pretty quick to say, hey, here are the areas you might consider. And so you've been really, you've been invaluable to me and our team on sort of that pattern matching, if you will. So really appreciate that. But kind of moving on here from kind of your investment philosophy and your journey, I wanted to kind of switch gears into kind of, when you evaluate startups and some of the maybe some pointers, maybe some tips for the entrepreneurs listening out there. I can imagine them wanting to hear what you have to say. So would love to ask you a couple of questions about some of your experience there. And so first question here is, what is a common mistake that you see founders make when they pitch you, either a first time or second time or early on?
That's also a great question. I think I'd have to sort of caveat it with where I was at the time, and where I am now is very different than what I have now or currently is, I think, and it wouldn't be expected, but many people are unfamiliar with sort of Japanese cultural norms and how to communicate effectively, and the choice of words and that set. And so often it's a communication sort of lost in translation thing with our particular LPs, where just the decks are too generic, or they're not honed for the specific message that they want to send. So backing up though, I think I see, and I have seen, probably the biggest pitfall is, lack of telling a story that's compelling. And meaning, like, you don't have to have, like, you can sort of overwhelm somebody with too much information and too many different in charts. And I think the pitch deck should really be there to tell a story. You can have memos or informational other documents or whatever that like go into the detail, but when you kind of have a pitch deck, you want to go through the journey. You want to see what the product is, you want to see the vision and why the team is the right team to make this vision happen. So I often see, almost honestly could be like half the time almost, decks where they just trail off into too much product. They're sort of like informational, like product marketing decks, or they focus too much on market information, and they're not really telling the story of how are you going to take this technology and where is it going. So I like storytelling. I think that's just an effective way to communicate, and I see that falling short. And with founders pitching corporate VCs, I think a huge thing is they also need to understand that it's quite often the case there will be a business unit that needs to get involved, and that deck or whatever may have to be reviewed without the corporate VC being in that meeting. So whatever you're giving the corporate VC that you're talking to really needs to speak for itself, and it clearly explain what the value proposition is and what you want, and et cetera. And so I see that as because what we talk about in discussion may not come through by the time it's being looked at a couple clicks away. And especially that happened all the time at Nike, where things would get passed around, and so knowing your audience, storytelling, and knowing the audience. If you're pitching Nitera, take time to look at Nitera's website and do a little maybe customization of the deck, and show that you're kind of thinking about that. That goes a long way. And also understand, like, is this deck going to be just for my meeting here, or is this going to be a passed around informational deck, in which case you're probably going to want to augment it with other materials so that it can kind of speak for itself. Because I think, and also pictures. So one other thing is, some images that some founders use in their decks could imply certain things, or maybe they're excited their technology is being used in the Ukraine theater because they have some sort of drone technology, but maybe they need to realize that, maybe that's for whatever corporate venture opportunity, they may not resonate with that. So, unless your whole product is around that particular application, maybe it'd be better to think about what images you're showing, and again, gets to know your audience, and tell a compelling story.
That's really interesting. Yeah, it's all about, so 100%, as you put it, it's know your audience, right? Like, I mean, this is like to me, this is like a foundational thing in all business, right? If I'm going to schedule some time with someone, and they're giving me their time, there's mutual respect here. I want to know who I'm talking to. But I agree with you. Investors, we get pitched a lot. And I think the pitches that resonate the most for me at the end of the day, right? If I've been a full day of pitches, the ones that resonate with me the most are the ones where the founder took the time to just know a few snippets of what we're doing, right? You don't have to know everything that Nitera is doing, obviously, or Global Brain is doing, but know your audience and position it accordingly. And then I like your storyline comment. That resonates with me a lot, because this is like a Don Valentine from Sequoia Partners kind of message. He always, I think his saying was, it's all about the storyline, right? When you first start a company, you have nothing, but you must have a clear and crisp storyline. And obviously that's particularly important for Japanese executives. They're all about the high level, right? And really sort of understanding it simply. Sometimes storylines can be complicated. So it's one thing to tell the story, it's another to tell it in a really crisp, clear manner, right? So very, very interesting. Very interesting. So kind of another question for you is, and you kind of touched on this in your evaluation here about things that mistakes, I guess, that founders make. But what if you had to characterize a single quality that matters most to you about a founder, right? What would that be, and why?
Well, the say-do ratio is important for me. So like, immediately, if we're saying things, are we following through? That is a fundamental character trait that I need to see. But I would say, to build on that, I like persistence. YC founders tend to sometimes have a little more sales or kind of like persistence behind them. And I like CEOs that are selling, because I think that's important, right? And so I like the persistence, I like the follow-up. And so I kind of like the combination of a good say-do ratio, but also,
like that.
Hey, you're not dropping the ball, you're following up so those little things help me kind of, unless it's like a nuclear fusion company and it's kind of like, well, we just need to solve this or that, and it's a little different. But for most companies, we're looking at a lot of software companies, you got to always be selling. So I kind of like that persistent sales kind of vibe.
Okay, I love it. I love it. I love it. So you mentioned earlier, pictures, right? Using certain pictures in your pitch deck. And so that's kind of an interesting situation for us because we actually have an investment pillar dedicated to wound care, right?
Mm.
We're one of the few corporate VCs out there, quite frankly, probably the only one I know of that have we have dedicated pool of capital for wound care. And as you can imagine, pictures in some of those decks can get pretty gruesome, particularly the preclinical or early clinical ones, right? So kind of showing the before and after. And so that's always a tricky one because I don't know, it's like know your audience. If you're talking to, a financial VC that doesn't have a medical background or they do medical, but look, they're not doctors or whatever, you might want to give them a heads up and say, hey, the following slide might be a little bit gruesome. We can skip that slide if you guys, you know what I mean? So it's interesting to see how different founders handle that. I've seen founders just go all in with like pages and pages of like gruesome, stage 4 pressure ulcers with healing times. And then I've seen the like warning, the next slide, I can jump to slide 12 if you don't want to see, And so I pay close attention to that. I have a particular filter for that, right? I want to see how the founder thinks.
I think what we now can do is, and what I think every founder that's in that situation, I fully agree, is consider doing simple AI animations that kind of make it like more like
Yes.
a cartoon. Even if it can be like like a real, like a video game level, like a Unreal Engine type level.
Yes.
Graphic, but there's plenty of tools out there now. And I think those would be just a little cleaner and crisper because yes, I've been turned off by all kinds of different wound care things, technology, seeing the images where you're just kind of like, you get distracted and you're like, I can't pay attention now because I'm so grossed out at that.
Yeah, I mean, you bring up a really good point. We've actually played around with some of those animations for communicating to our board about some of these things because I think the last thing they want to see when they're eating lunch is pages and pages of these gross words, right? So I agree, and certainly AI makes life a little easier there. You mentioned AI earlier in the conversation, and you referenced how AI could be a powerful tool for VCs. Do you see, this is a little bit of a reflection on where you think the venture capital community is headed or where the venture world is headed. Do you see AI actually replacing venture capital investors or allowing people with no venture capital experience who work for corporates to use AI to make venture investment decisions? Do you see completely going in that direction, or what's your take on that?
Well, I think AI can be and should be a powerful tool in sourcing. It definitely should be a powerful and normalizing tool in evaluation. I think doing things like cap table analysis and return models can be easily automated. And just so there's a lot of applications in the business. So I think it can really replace the need for back office and mid office personnel. And now in terms of like, does it replace us? Somebody still has
Let's hope not.
Yeah, well, somebody still has to sort through the recommendations and do something about it.
Yeah.
And I think that it's sort of, to use a medical analogy, do you want the person with the first aid kit reading the manual while they're trying to, like save you, or do you want the paramedic who already doesn't need the manual to kind of deploy on you? So I think in addition, AI, there's a huge gap between, hey, this is a good investment and this is what the return should be, and then actually materializing that, which requires, especially if you're depending on the cap table, piece that you're going for. But if you're involved on the board or governance, AI is not going to be able to accomplish, at least not in the near term, the different skills of board members and governance. And so I think, financial controls, but being a board member also involves a lot of psychology and sort of, doing things that aren't necessarily in the job description, especially in earlier stage companies. So I think AI should be a very powerful tool in venture capital. I think it can make it can certainly, I think, normalize a lot of the projections and like financial analysis that just is very subjective to whoever's doing it and what they're doing, what methodology they're doing, etc. So I think it can help there. And if you're only taking very small minority pieces of companies and not involved in leading rounds, you could certainly go like a correlation ventures model where you're just kind of statistically picking spread. But I don't really see too many corporates wanting to do that because it's not the way they engage. So I actually don't think so. And I also think corporates that don't have people trained, they just say, hey, here's AI. That person still is going to move on at some point or shift through. At least in Japan, it's typical for folks to kind of move through different positions every couple years. So you still lose that domain knowledge. And then you also need the network, like we talked about earlier, the network to understand stuff. So I actually think venture is one of the areas where there will be a sort of a core human factor, at least for the foreseeable future, sort of like medicine. I think AI powered doctors is a great thing, but I definitely don't want AI deciding my prescription medication regimen, not having a human like sanity check it.
No, that's awesome. So glad you brought up medicine, because I wanted to, this is inherently a health tech podcast, as the name indicate. But obviously I've interviewed founders, investors from all sectors, climate tech, but inherently health tech I have a deep love for it. I spend a lot of time in it, more time in healthcare than in deep tech, but I'm seeing an exciting convergence between deep tech and healthcare today, like I've never seen before. I saw multiple hype cycles of it, right? Like you brought up your time at Shepherd Ventures, right, in San Diego, and it sounds like you were looking at the early days of like Bluetooth, RF, and wireless health, right, as I think we called it back in the day. And look, I think there was some adoption, right, but it wasn't like it was not mass adoption, right? It was adoption here and there, and then a couple of use cases played out, and then they fizzled out, right? And the challenge I have with healthcare is you've got this divergent, like you've got the technology here, and then you got the business models here. How do you bring those together? That's the big challenge, right? We live in a fee-for-service business model when we should be shifting to fee-for-value. And everyone keeps talking about fee for value, but it's sort of not happening as quickly as we all hope. But I'd be curious just to get your take on, we talked about AI, obviously that's a common theme where people are talking about it in healthcare. What are some of the things you're seeing? What are some of your observations of the healthcare industry, and how does that parlay into, you think, the investment landscape?
Well, that's a super open-ended question. I would say,
let's take it a bite at a time. What's your
like 20 years later, we're finally seeing like EMR, knowledge management, electronic medical records sort of be more ubiquitous. I think the COVID experience sort of was like a Cambrian explosion for sort of telehealth and really pushing that, I think, well, also just Zooming and video conferencing. So I think but I've also seen a contraction now where different groups are like, well, we're not doing that anymore. You have to come back and see us again. I think, to be honest, AI is honestly one of the biggest challenges. I've moved a lot and I've experienced a lot of different healthcare systems and worked with a lot of different doctors for different reasons. And there's a huge inconsistency with knowledge and skills. Locally, I had an experience recently where I think I interviewed about 6 doctors on a particular topic, and literally only 2 of the 6 actually were able to possess the adequate knowledge. Actually, only 1 of the 6 had the full knowledge, the equivalent knowledge that AI had, like that
Wow.
the grok can have if you press a button.
Wow.
So I think I like and I even got into an argument with one of the doctors while I was kind of like fact checking him with AI. He got actually defensive and said, "Oh, it'll never, it can't, So I think what I like about AI is if it's done correctly and you have the safety parameters around it, you can not just access everything there is to know about a topic, or at least you hope, but you can have sort of like smaller language model libraries that you can tap into, or there's the potential for even theorizing on the potential for interaction with drugs. Because right now, for instance, nobody's trained in supplements. So you go to your doctor, like, can I take this supplement? They either say, I don't know, or they might give you, I run into my doctors now literally using Google or ChatGPT in front of me. And it's like, that's not satisfying. I could be doing.
Yeah.
So I think having sort of a ubiquitously trusted, or at least a kind of a trusted AI that can sort of fact check the doctor on medication interactions and understand, because I think people don't remember. So this is the big issue with healthcare is generally compliance. And it's like people aren't following the guidance they're getting from their doctors, or they're not eating, or they're not following. And then just the compliance with whatever their, like medication compliance. So there's a lot of things that are just contribute to chronic healthcare issues. And then the system itself is also sort of overwhelmed. So I think AI can help hopefully distill out and find issues, and also can speed things up. Like, for instance, using AI to analyze radiological imagery, or like a CAT scan, for instance, you can detect a schematic stroke immediately where a human probably wouldn't be able to detect it. I've seen a company that claims to do that. So things like that, where we can take diagnostics and really supercharge them, and supercharge also physicians that may not have that same level of experience in areas that are maybe more remote, or just not where all the research universities are, and kind of make a more equal experience where people are going to get treated and are getting the same advice. And then hopefully expanding that into, hey, I'm taking these 20 different or whatever supplements. What does that conflict with my blood pressure meds or whatever? And that's a real gap right now. There's not really, I've personally experienced a very terrible understanding of supplements. So that's something that I think we can look at a lot, because I think there's a lot that supplements can do with anti-aging and really anti-inflammation, and that would really help with a lot of chronic healthcare situations. And it's like kind of like a flywheel.
Yeah, no, it's interesting. Yeah, I think the opportunity for AI is, so you touched on a couple of things, like patient engagement, right? So AI to maybe more deeply engage patients, because if patients don't do what they're told, or what their health and wellness protocol is telling them to do, then it's difficult, because there's things you can do to prevent issues from happening, right? So there's health prevention, right? Or acuity prevention, right? And that really boils down to engagement. It also kind of boils down to provider productivity, right? So providers are feeling overwhelmed, right? The population is aging. Doctors are getting more and more overwhelmed, particularly at the primary care level and at the specialist level, right? And so can AI help with, some call them administrative things, like documentation, right? Documentation, and or helping treat the no-brainer stuff, like the easy to, like you mentioned, the CT scan for a hard to read stroke. Let's get the low-hanging fruit documents reviewed and diagnosed quickly, so that now the doctor can spend more time on the more difficult to read diagnostic images or something, right? And give the doctor, free up their time to think through, what can we do to make this patient, outcome better, right? And so that's what I'd love to see healthcare go in that direction. I think we're just at the beginning of the journey, and they're seeing, I don't know if it's a renaissance or whatever, but there's definitely an AI inflection point. There's a little bit of hype to it, but I think the hype is a little bit, I think, less of a hype after the pandemic. I think we hit a peak hype cycle during the pandemic. Like we had this Gardner hype cycle, the highest hype cycle we've ever seen in digital health, and it was probably the second or third one that I saw in my career. And now we're in this. I like to say we're on a path to productivity, right? But there's that, you within the realm of AI, you still see these little hype cycles, and valuations get adjusted accordingly, which is something I'm seeing. But it's really interesting. It's really interesting to kind of hear you kind of point out some of the things that you're seeing in the health tech sector and some of the trends you're noticing about healthcare in general. Do you think, as you think about, do you guys do anything in pharma or med tech, or do you touch on those industries at all, or is it mostly are you looking at software stuff, right?
We look at sensors. So we have some funds that actually will look at radiological imagery that's being analyzed by AI, or drug discovery, or that's kind of powered by AI. It really kind of varies. It's because a lot of our funds have very diverse interests, and I think our website actually lists this. I think healthcare is probably the largest single sector that Global Brain invests in. About 18% of our deals are healthcare. Yeah, so I also think a lot of telehealth or like digital healthcare services are, I was going to say, somewhat difficult to invest in globally because they're usually specific to like the regulatory system. Like something that's going to work in the US has no applicability in Japan necessarily. So we're more looking for like medical devices or therapeutics or things that are not dealing with payers or sort of medical records. We don't tend to look at that because that's going to be specific to the US market.
Sure. Got it. No, that's great. I was reading an article a few weeks ago. It might have been a couple of months ago now, but it was, and again, got to fact check these things, so don't quote me on it. But they ran a quick study using ChatGPT where they ran a bunch of dermatological images. So they took a bunch of photos, and they ran 3 groups of patients. So they did. It was this, I believe it was the same set of patients, but then they kind of mixed things up. So they had their control group. So they ran one set of patients on ChatGPT only diagnosis, right? Then they did one where the doctor owns the diagnosis, but they used ChatGPT to do it, right? And then documented the final call by the doctor. And then they did the doctors only. So no tech enablement, no AI. It was so shocking to me. My head exploded. We were so the ChatGPT only accuracy rate was in the 90s. I think it was like 95, 96%. The doctors using ChatGPT was about 72%. The doctors only was about 70, 75%. So it was almost like ChatGPT being used by doctors eroded their accuracy. Like they were almost inherently challenging what the AI was sort of producing, right? And so, like in your mind, I know this is a tricky question because it's hard to answer, and maybe spend a portion of your time in the space, but what's your sense on how do we get over that climb right now? Like we're in this like autopilot mode for planes, right? For a long time, autopilot, it was like man versus machine, right? And like at one point, man has to trust machine, but machine's not always right. So you want man to sort of overpower it when it's wrong. How do we get over this little hump that we're dealing with here, right? Like it's almost like doctors versus AI, and how do we create a good healthy balance that puts patient outcomes and accuracy ahead of everything else?
Well, I think payers are going to have a big influence on that because I think they're going to want to see like that gap between the 90s and the 70s is a huge gap where I'm sure there's cost there. I think there's kind of 2 AI buckets. There's kind of the AI agent that will help kind of do patient intake and maybe do, conflicting drug dosages or whatever. There's that kind of like almost like the nurse or PA type stuff that doctors don't have time for. There's that, and that will just hopefully eliminate error. Like you get all these blood tests, or some people do, and no one's looking at the years of them and thinking about what does it mean if this is doing that or whatever. So there's kind of AI agent or specific use case analysis. Then I think there's just AGI. And when we hit AGI, I mean, there's got to be some sort of a bake-off between physician and said AI. And then once we have reached sort of like a quality assurance and quality control level with the AI that we can sort of trust life to it, then I think, humans still need to monitor what's going on. But I think naturally what will happen is it'll just kind of be like, well, who do you want? Here's your clinic AI instance, and it kind of leads the patient engagement, and the doctor is moving more to just like managing and making sure that it's sort of like more almost like a QA role, because a human brain just cannot comprehend and AI can analyze the molecular bonds of all these different drugs and then theorize how they might interact. It could be it's theorizing, but the human brain isn't even gonna I've had this experience just with, because again, if you might have caught, I'm into a lot of supplements, and I get into these conversations with doctors, and they can't even explain basic questions about organic chemistry that I would have understood in my college, course as a freshman or something. So I think there's so much information that I think AI is going to just naturally be almost like forced on doctors, because startups will be pitching or somehow find their way to the payers and say, hey, look, we can eliminate 100% of the issue here. And also personalized medicine. I think analyzing what a person is doing and the dosing calculators are not always as accurate based on different information. So I think it'll be either they're welcoming it in or not. They're going to be dealing with it. I suspect the payers will say, we're not going to reimburse you unless you have this AI, validate that you made a good decision. So I think we'll see it in that side of it.
That's really astute. Yeah, I actually completely agree with that. Yeah, and I think doctors just need to learn to coexist with AI, right? It's sort of table stakes at this point. It's just there, just like EMRs are there. You got to document. You've got to use AI, right? And I think, look, AI still has a ways to go in terms of, proving the data is accurate and building credibility within the medical community, but that's around the corner, right? I think that it's headed down that track, and I think you're right. Institutionally and business model wise, the payers are what's going to drive the adoption. So you're absolutely right. Switching gears here, I know we're kind of coming up on time here, and you've been awesome, and I've enjoyed this conversation. But I'm hearing a lot of things, a lot of mixed messaging out there. I'm hearing, our administration, we've got tariffs, we've got large corporates panicking about the tariffs and how it's going to impact their long-term horizon of their business. I think, Natera is I think it's in solid shape, as evidenced by all of its public records and what they've disclosed to the public. So obviously we're weathering the storm, if you will. But a lot of other corporates are struggling, and so it's causing a little bit of chaos in the capital markets. But then I'm also hearing about companies like Chime going public, right? And then based on the filings of that, it seems like IPO markets are getting better. Can you talk a little bit about what your thoughts are on the current state of venture capital markets, and then are exit horizons going to open up pretty soon?
Well, that's definitely also a big open-ended question. I mean, I think my feeling is the VC market is rebounding a bit from maybe a couple years ago. I think interest rates are obviously the key thing here. They drive big acquisitions and PE acquisitions. So I think right now the market is actually probably pretty good for smaller acquisitions, and I think I would suspect we'd see those increasing. I think PitchBook recently commented on that. With respect to the IPO markets, I think I saw something recently where the consensus on recession was over the last, I don't know, 3-4 months has dropped from 70 to 30 now. So I think that my impression is the IPO markets are improving. We'll see next week what happens with Chime. I think it was originally it's like a $25 billion private valuation, and I think they're launching at 11. So we'll see on that. But I think I'm optimistic interest rates will. I think they're being held constant. I think I heard today or yesterday. But I feel like this administration will continue to drive the kind of the drums of let's get these rates down. And I think as we see interest rates drop, which I think they inevitably will, meaning over the next 2 years, we're going to see a bigger interest in large acquisitions and certainly PE acquisitions. I think there might be too many, fund managers out there. I think the number of VCs operating funds has increased dramatically over the last 5 years. I don't have those numbers, but I think there's probably a dearth of, I wouldn't be surprised if a third of the current funds had to sort of close shop over the next 3 years, just because they sort of invested in that crop of valuations that was sort of artificially, hot, not, sort of like the bubble valuations of the 21 timeframe into 22. And a lot of those portcos are not, raising, they're doing down rounds or doing different things. So I think overall venture industry it's often pretty good, and frankly we're seeing a lot of valuation corrections, and I'm seeing great opportunities. So to be honest, in my opinion, or what I'm advising my LPs is this is actually a great time, or one of the best times for us to be investing, because there's a little stress on the financial VCs, the corporate VCs who maybe are less focused on that, on an IPO exit, for instance, are going to be out there and be more willing to provide, customers or, market validation or, create more value necessarily than a financial VC might do to a portco. So a VC industry, I think we're improving from a couple of years ago. An IPO industry, I think I haven't looked at these numbers either, because I think we don't have we're still in Q2, but I bet Q2's numbers will be, look as good as Q1 numbers did. And so I would say this is what we all say, but cautiously optimistic. But I think the real lever is interest rates. So I'm hoping by Q4, or my feeling is that hopefully they'll be dropped in later this year. But certainly when they do, I think we'll see it'll be very important to the liquidity process, because I think M&A will take even more of a front seat.
Yeah, no, that's pretty spot on from kind of what I'm seeing as well, and it's a good point on interest rates, right? I think large corporates are saying, hey, so large corporates, which could flex up on enterprise value if they debt finance, are saying, hey, let's not do that right now, so as not to inundate ourselves. Let's go down into the lower middle market and see what's available. And I think there are quite a few things on the market today. I'm seeing a lot of activity there, sort of anecdotally here, just by talking to colleagues and being approached by bankers. Obviously there's a ton of course correction around valuation right now. Our last couple of deals have been, interesting in that regard, right? And so we're seeing a lot of things emerge that are course corrections, but it's really hard, right? Because especially in digital health, where we had this crazy inflection point in 21, 22, right? Like insanely high valuations. You were talking about telehealth, right? My last fund, we had a telehealth company that popped at 20 times revenue, right? In 21, 22. And those valuations are long gone, right? And so we're seeing, a lot of these folks that are still listed, they're out there trading at maybe 2 times revenue, 3 times revenue if they're lucky, and in many cases have more cash on the balance sheet than they do market cap. What do you think those companies can do to, course correct their own valuation? So say you're public, let's say you're public, right? You're like Amwell, Teladoc, not to throw them under the bus, but everyone knows they're listed and all their information is public record. What can they do to change the game and get their stock rebounded or rallied?
Well, that is a good question. That is not, I would say, I don't know if I'm armed with the full enough knowledge to come up with a super smart response to that, but I think basically what I've observed is physicians in my own network that used to do telehealth or healthcare systems are saying no. Like for instance, the Memorial Healthcare System where I am in South Florida, they now have said as of this year, hey, no more telehealth. You have to, patients have to come in. And the doctor that told me that was sort of bummed about it, but he gave me the impression it was, has something to do with quality of care, something of that effect. So I think if that's just one little anecdotal data point, but if that is a trend, then if I were those companies, I would be probably talking to those healthcare systems and seeing what needs to happen to reverse that trend. They could also adopt different technologies that might make the experience more robust. I've had doctors that have telehealth platforms that contact me and it's too buggy, and they, believe it or not, switch to FaceTime.
Yep.
And which is, probably more secure, but basically like that shouldn't be happening. And if it, or why not just use FaceTime, right? I mean, like what's the deal here? So I know there's HIPAA laws and all this other stuff. But yeah, so I think it's kind of like understanding the utilization and where it's diminishing, and then the technologies like AI that can maybe do better image analysis, or like encouraging, like I don't understand why there's not more of, hey, take a picture of this and email it to me and I can do some base analysis, or engage with patients, because you don't need more people in doctors' offices. You don't need people don't have time to sit and wait, and we all know that no one runs on time. So this is, I think it's, selling efficiency with time is a big deal, and selling a bug-free, at least as good as FaceTime experience. I mean, it kind of probably has to be better than FaceTime, but like a FaceTime plus, or something. So I think there's got to be ways on the UI that you can make it better for the physician, maybe like a heads up type display of some patient information that they can see. I don't know, I'm making that up, but I think you just do product enhancements and understand like I'm guessing the use cases are obviously diminishing based on the market trends. Why, and how do we boost them? And at least from my point of view, it's probably being pushed not by the doctors as much, by maybe the people that own the infrastructure for some reason. Maybe it's more profitable that people come in to the offices. I don't know.
Yeah, I think you're touching on something there. It's kind of getting back. It's like, I think in telehealth, it's about broadening the use case, right? Like you said earlier, there's only so much you can see in a telehealth session, but there's also a lot you can kind of expand into with the use of AI and connected devices. So I think it's equipping the patient with some of those kind of maximum amount of technology enablement to allow for a broadening of use cases, right? Like, let's listen to the lungs. Let's look inside the throat with a connected device. Like, let's equip the patient with those capabilities. That's a technology thing. That's something you solve with technology. But what you can't solve with technology is sometimes you do need a high touch service, right? You need the doctor and the patient to interact. And so it's a balancing act of what you see virtually and what you see in person. And look, services can be very profitable. So just plugging our own kind of investment thesis out there, I think our investment thesis is more around how do you balance virtual and high touch services, right? Send the doctor into the home.
Yeah, I mean, I think it's unnatural for patients to be in a medical facility anyway. You're not yourself.
It's more dangerous in a hospital than it is at home. I promise you.
And I think most people probably have a higher blood pressure in the doctor's office than they do at home. So there's technologies like hyperspectral imaging that can actually resolve individual bacteria. There's all kinds of, so as we, over the next few years, as we see edge compute able to do Gen AI through enhanced, basically like processors and power utilization, you're going to get more like intelligent sensors that are hopefully able to do more edge processing, and hopefully so there's less bandwidth drain although you'd think we would kind of be past that by now. But I think having like consistent connections are also, connectivity issues are a huge problem too. So technologies that can sort of augment or make sure that you don't have like a bad telehealth experience, that's a huge thing. So I think there's a lot of helper technologies that are going to bolster this. And I think the notion of bringing health to the patient where they are is the only option, because they really shouldn't be, I shouldn't go to the doctor's office unless there's something that they just cannot do, which is like, a blood test, or maybe like listening to or doing a physical exam. But most of the time it's just like, oh, look at this, or having a conversation. What do you think? And a test is ordered anyway. So I think we can really optimize that. And also just bringing basic, like we're probably more aware than most people, but just bringing basic level, check-ins and just well checks, frankly, to people, and hopefully, and also helping educate people, because a lot of stuff is just because people just don't know, or they don't want to know.
Yeah, no, that's spot on. That's spot on. Yeah, look, Brian, this was awesome. I really enjoyed this conversation. We covered a lot of topics, but I wanted to kind of give you the last word here. What's kind of what's your message to listeners out there? And then how can people follow your work? Give them whatever you're comfortable with, LinkedIn, email, whatever you're comfortable with, so that people can follow up if they have interest.
Sure. Well, on the latter point, I actually do respond to LinkedIn requests, or outreach. So that is a possible way to connect. It's probably the best way to just blindly connect to me. Global Brain's website does have the ability to send business plans, but and I do look at those as well. But I think LinkedIn is probably the best way. Or my email is brian@globalbrains.com. So that's another way. In terms of following my work, I post again on LinkedIn a lot. So if we're doing investments, you're going to see them there. Global Brains website is also a good place to see what we're investing in. I actually what was the first part of your question?
Oh, the first part is what are your parting words for the listeners out there? Any parting words, any message? What's your message?
I think this is a rad time to be an entrepreneur. I think we're literally we're kind of in truly a golden age of innovation, because we're now at a point where we can have AI and machines do things and look at things and just basically do things faster and quicker than a human in many ways, and that will supercharge, I think, us as people to innovate. And I think we're going to see that curve just go like really off the rails. And I think there's a lot of exciting innovations in energy, in medical technology, and space technology. So I think this is the best time ever to be a founder. And I think personally, the best time to be in any deep tech category that you like.
Awesome. That's great. Well, ladies and gentlemen, Brian, how do you pronounce your last name? Is it Flucht?
In German, yes. In the US, we just kind of say Flucht.
Flucht.
Yeah.
Brian Flucht, everyone. Please feel free to reach out to him. He gave you his contact info. And look, really enjoyed the conversation, Brian. Thank you so much. Looking forward to catching up with you next time, see how things are going. But really appreciate your time. Thank you so much.
Thank you, Tom, for having me. Have a great rest of your week. Take care.
Take care.
Bye-bye.
Bye-bye.
Thank you for joining us on the Health Tech Invest podcast, powered by Natera Ventures, your go-to source for healthcare and tech venture investing. For additional information, resources, and ways to connect with us, please visit nateraventures.com. Together, let's spark innovation for the future of tech and healthcare investing.